Awesome. Thank you, everybody, for joining us today. I get my screen up here. Um, we are going to be covering what's new in 2022's personal tax year today. So today's webinar, we're going to cover 7 important questions you need to ask, including what's new for 2022. So hopefully you guys will find this session really helpful. Once again, my name is Andrew Wall. I'm the managing partner here at CPA4IT. For those of you who are not familiar with us, CPA4IT is an accounting firm in Canada specializing in service-based professionals. We've been in business since 1984 when my father founded the practice. And as I said, we specialize specifically in service-based businesses. And our mission is to help our clients organize their finances, create wealth, and transform wealth into a legacy. Today's webinar is targeted at organizing your finances and specifically on filing your personal tax return for the 2022 year. We're going to be covering some important topics today. Do you need to file a tax return? When is your tax return due? Can you get any help preparing your tax return? How should you prepare your tax return? When will you get your notice of assessment? When will you get a refund or when do you have to pay your taxes? And lastly, and what I think a lot of you are here for today, what's new for 2022? So before we get to that, let me cover some of the basics around what you need to know, including do you need to file a tax return? The bottom line here is yes, everybody needs to file a tax return, even if you think you were due a refund. Now, if you're late in filing your tax return and you are getting a refund, then you can potentially be late in filing without any repercussions, but you are potentially losing out on getting access to those funds that you're entitled to. Of course, even if your income was exempt and you had no income in the year, you might still have to file your tax return for Canada Child Tax Benefit, GST, HST tax credits, working income tax benefits, guaranteed income supplements, and climate action incentives, which actually this should be updated and removed. But it is important to make sure that you are filing your tax return, even if you think you're due a refund. So when is your tax return due? For most of us, it's going to be due by April 30th. There is an exception for self-employed individuals and their spouses, and they actually have until June 15th to file their tax return. However, that is the filing deadline, not the payment deadline, and CRA still expects you to make all your payments by April 30th to avoid any interest. So if you are self-employed, I would still encourage you to target that April 30th deadline. And in fact, if you're self-employed, I would encourage you to target an even sooner deadline because there are often complications with self-employed individuals that make their returns more complicated than a straightforward, simple T4 return. So we want to make sure we get your returns in as soon as possible because we do help our clients on a first come, first serve basis. And as you can imagine, this becomes a very busy time of year for us. And we never know when clients are going to drop off their documents. And you want to make sure that you're getting your information to the front of that queue. So another question people often have is, can I get help preparing my tax return? So of course, we're here to help with all of our clients, but of course, most accounting firms like ourselves do charge for our time. But there are other forms of assistance if for whatever reason you don't have the ability to work with an existing chartered accountant. And I do always encourage people to work with a chartered accountant unless they've got a basic T4. Now, if you've got a basic T4 and maybe some RRSP slips and nothing else going on as far as self-employed income or rental income or investments or anything else that makes your return a little bit more complicated, then I certainly welcome and encourage people to use tools like TurboTax, which can be excellent, very cost-effective tools for preparing your tax return. And if you've got a straight T4, there's not much that we can do as far as tips and advice to help maximize that deduction, which is very different than what we can do on a corporate tax return. Now, if you're self-employed, you have rental properties, you have investments, there's definitely a lot more assistance that we can play in that. But if you are of modest income and you have a simple tax situation, there is a volunteer program from the Community Volunteer Income Tax Program. So they might be able to complete your income tax and return for you for free. And this service is offered all year round, but they do have special clinics between February to April. And these are in various community organizations across the country. And if you are in need of that kind of support, I encourage you to check out the CRA's website to find out where you might be able to find some local assistance. Of course, the CRA themselves can sometimes be useful, and they do provide a lot of information on their website. And you can also call them at any time that you'd like to ask questions, and they do their best to help support you in any way they can. The only downside is you will often wait online. Now, we have in our upcoming webinar a great tool or a great blog post on the MyCRA and MyCRA business accounts, which are really amazing tools for helping you in preparing your personal tax returns as well as your corporate tax returns. So keep an eye out for our upcoming newsletter and the great blog article that we have on that. As well, we do have an upcoming session on some new tools that we have launched this year for those individuals with self-employed income, as well as rental properties, to make that process a little bit smoother and easier for both of us. So now it brings us to our next question. How should I prepare my tax return? Well, the first step is obviously to collect all the information and supporting documents that show obviously your income, and if you're self-employed or you have rental property, your expenses, any deductions that you might have for things like RSP, childcare, those types of things. So you want to gather all of that information. Again, if you're not sure what to gather, we do have a checklist. Our notification went out to all of our existing clients with a form to complete. And once you complete that form, you will get access to our checklist, which will go through all the various documents that you may need to collect in the gathering process. But once you've gathered all the process, you'll need to select either the software or the service that you're going to use. So there are tools out there like TurboTax, which again, great tools for the price. They really are amazing tools if you've got a simple return. Of course, if you're going to be using our services, then you want to make sure that you're reaching out and bringing in your information to us and providing it to us in the format that we like, which is preferably through our online communications platform called Liscio. You'll want to make sure that all your personal information is up to date with ourselves and with CRA. One important thing to note is that if we are trying to file a personal tax return with a change of address, we have to paper file, which costs you more and delays everything. So it's usually recommended to request a change of address if you happen to have one prior to filing, so that we are filing the return with no change on the return, which means we can e-file the return and get it out to you appropriately. So you obviously want to report your income. This is the number one thing that CRA is looking for. If you do not report income, this is tax fraud, tax evasion, and the CRA doesn't like it very much, as you can imagine, and they will come after you with both barrels. So you want to make sure that first and foremost, you're making sure that you're reporting all your income and you haven't missed any slips. Again, this is where great tools like the MyCRA account can come in, because you can see anything that the CRA has access to. You want to find out which deductions, tax credits, and benefits you can claim. We'll be going over some of those later today. And then you want to send your tax return to the CRA and make sure that you keep all of your supporting documents. So when you e-file your return or send the documents over by paper file, you typically aren't sending over all of your slips. You do need to keep those in the event that you are audited, so that you keep all your supporting documentation in a easy to find and easy to sort through format. We prefer digital whenever and wherever possible, because digital doesn't fade, doesn't get lost, and is the preferred format in my personal perspective. So the next question is, when will you get your notice of assessment? A lot of people want to know, how quickly will I get my notice of assessment? Particularly those of you who might be looking at purchasing a home, because you'll need your notice of assessments to provide to the banks. So if you use the Express NOA service, you can get your NOA pretty much right after filing. So you can also ask us for a copy of your Express NOA if we are providing that service for you. But otherwise, you can expect your NOA within about 2 to 6 weeks. Now, CRA says too, we usually see 2 to 6 weeks. And you can access that either online or if you still have snail mail set up, it will be mailed to your actual address. So I would recommend everyone get the online services set up and make sure you have access to your MyCRA account as well as your MyCRA mobile web app, which is another useful tool. And the next question before we get into, and the last question before we get into what's new for 2022 is when will you get your refund and when do you have to pay your taxes? So if you have a refund, you can certainly verify the status of your return and your refund by logging into your CRA account, your My Account, or the MyCRA mobile app. But if you have direct deposit, you should receive it within 8 to 14 days after your return has been e-filed. Now, if you don't have direct deposit set up, again, we're looking at that 4 to 6 week time frame for checks to be mailed out to you. Now, if you have a balance owing, again, this is going to come back to that April 30th deadline. You will, if you're self-employed, get there's no penalty if you haven't paid by April 30th, but there is interest that they accrue, so you certainly want to pay everything by April 30th. There are a number of payment options that are available through CRA. They have Plastique, which is a tool that allows you to pay online through a credit card. They do, I think with Plastique, have installment payments set up, but they do charge you interest. And for those of you who are wondering, is it worth it to pay by credit card to get the credit card points? I will tell you the answer is no. You will pay more in the additional fees than you will receive in credit card points, no matter what kind of amazing cashback card that you have. So in addition, if for whatever reason you don't want to use Plastique and you can't make the full payment, you can certainly contact the CRA to talk to them about making a payment arrangement. And this is the one thing I always say to people: if for whatever reason that you can't make the full amount, it is important for you to reach out and connect with them, because they will send you to collections. They will impact your credit rating. They will potentially put liens on you. It can be quite negative if you're not working with them. But if you do work with them, they will typically give you at least 6 months payment terms, sometimes more favorable depending upon the auditor that you get. They will continue to charge you interest, but at least they won't send you to collections and put liens on your house. So now this is the meat and potatoes that everyone was waiting for. I've broken this up this year into federal and provincial, and specifically we're talking about Ontario because that is where the majority of our clients reside. So we're going to first start with the federal changes. So there's now an air quality improvement tax credit. So if you are self-employed or a member of a partnership, you might be eligible to claim a refundable tax credit that equals 25% of your total ventilation expenses to improve ventilation or air quality in your workplace. Again, there's more details on that if you're interested. We also have, for those of you who are investing in critical mineral exploration, there's the critical mineral exploration tax credit. This is new. It's a 30% investment tax credit for the exploration of specified minerals. The CMTEC, as it's affectionately referred to, will only apply to expenditures that were announced under the eligible flow-through share agreements entered into after April 7th and before April 7th, 2022, and before April 1st, 2027. So this is going to be going forward. Again, if you need more information, you want to look at tax form T2038 on that. And again, I should say that for more details on the air quality improvement, that's going to be line 47557 on the personal tax return. Whereas the critical mineral is a special form. It's a tax form T2038. There is also for the disability tax credit this is a change from last year that continues on, and that's for 2021 and later tax years. Now individuals who are diagnosed with type 1 diabetes are deemed to have met the 2 times and 14 hours per week requirements for life-sustaining therapy. So improved options for the disability tax credit there. And again, for those who would like more information, you can find that on Guide RC 4064, and that will have all the disability-related information. For the first-time home buyers tax credit, the amount used to calculate the tax credit has increased to $10,000 for a qualifying home purchased after December 31st, 2021. So that's helpful. In addition, there are changes, as many of you have heard, about the new home buyers, first-time home buyer savings account. But that doesn't actually affect this tax year. It will affect the 2023 tax year. This tax year will be the first year that you can actually make a contribution, and that won't be until April. We also have the home accessibility tax credit, and this annual expense limit has been increased to $20,000 for the home accessibility tax credit. We also have the labor mobility deduction for tradespeople. So the labor mobility deduction provides tradespeople and apprentices working in the construction industry with a deduction for certain temporary relocation expenses, and eligible individuals can deduct up to $4,000 in eligible expenses. This is going to be on your form T777, which is your statement of employment expenses. But if you want more information, there is a guide on this for employment expenses. And for those of you, any of you who are looking at employment expenses, you might want to look at guide T4044, which gives you a guide on employment expenses. Arguably, the most discussed topic here is this year is the change for the medical expense tax credit. And this year, you now have the ability for surrogacy and other expenses. So the list of medical eligible expenses has been expanded to include amounts paid for fertility clinics, donor banks in Canada to obtain donor sperm or ova, to enable conception of a child, the individual's spouse or common law or surrogate mother on behalf of the individual, in addition to certain expenses that are incurred by the surrogate or the donor, are all considered medical expenses of the individual. Again, if you want more information on that, that's going to be line 33099 on the personal tax return. So that is arguably the most important new change for this year federally. Now, when we shift over to provincially, arguably the most important change that we are seeing provincially is the Ontario Staycation Tax Credit. So many of you might have heard about this. So for Ontario residents, you can claim a credit of 20% for your 2022 qualifying expenses for accommodations in Ontario of up to $1,000 for an individual or $2,000 for a family. Now, only one person per family can actually claim this credit for the year. So if you have children that are filing their own personal tax returns who are under 18 and they're considered dependents, they cannot claim this. And it's only one of you per household, so that's important to note. Accommodations include, they must be registered for GST, HST, and it can include hotels, motels, resorts, lodges, bed and breakfasts, cottages, and even vacation rental properties. So this is a nice little advantage. It's 20% of $2,000 is the maximum, so it's not a huge windfall. It was more of a political thing than anything else, but hey, we'll take every credit we can get. So there is also the Ontario Jobs Training tax credit. So this tax credit provides 50% of a person's eligible training expenses for up to $4,000 for a maximum refundable tax credit of $2,000 per year. However, you've got to be resident of Ontario. Obviously, you must be between 26 to 65 years of age, and you must have a positive Canada Training credit limit for that year. If you're not sure whether you have it, again, you can find the Canada Training limit on your latest note of assessment, and you can also find it on your MyCRA account. There's also the Ontario Seniors Care at Home tax credit. This credit was available in 2021, but it's being continued to 2022 tax years, and it's worth 25% of up to $10,000 in eligible expenses on a senior's principal residence, and the expenses must have been paid, in the current year, and the maximum credit is $2,500 per year. We also have the Ontario Senior Public Transit Tax Credit. So on this one, you can claim up to $3,000 in public transit expenses and receive up to $450 in tax credits. Keep in mind, you can only claim the tax credit for senior fares that you were actually paid. This is going to be on line 63-100, and that's going to be for the total qualifying payments that you made on the eligible transit services up to the maximum of $3,000. And those are basically the big changes. We did want to just mention again something that is, was new. I guess it was started in 2020, but is being carried through. So we still have the same rules for claiming home office expenses if you do have work from home opportunities. Now, keep in mind, if you are one of our T2 clients and you're claiming a home office, you should not be claiming work from home expenses on your personal tax return. These are more for traditional employees. So if you have a spouse and they received a T2200, then this is going to apply. And basically, it's the same rules as last year. So you can claim electricity, heat, water, utilities, home internet access fees, maintenance, and rent for houses, as well as home. Commission-based employees can also claim home insurance, property tax, and lease of their cell phone. What cannot be claimed is mortgage interest. This is very different from what you can claim in the business. Principal mortgage payments, can't claim those in the business either. Home internet connections cannot be claimed either unless you are a commission employee. And you can't claim furniture or capital expenditures or wall decorations. So that remains fundamentally the same as prior years, but we thought it was worth recapping as well. So I've flown through this very, very quickly today. I do want to make sure I open it up for a Q&A to see if there's any questions about this personal tax year, and see if there's anything that we can do to help you organize your finances, create wealth, and transform wealth into a legacy. So if you are joining us live on Facebook, maybe I'll just stop sharing. If you're joining us live on Facebook, you're noticing that my collar's not popped, as well as any questions that you post there will be put over into my Q&A questions here live in Zoom. If you're on the session live, feel free to post your questions in the Q&A. I'll be looking there first. If there are no questions in the Q&A, I'll look to the chat. And then if there's no questions there, we will close out for the day. So I'll give everyone a minute because I know sometimes that first question takes a second or two to come through. And excellent. So it seems like there's no questions today and everyone's ready for to file their personal tax return. We are taking personal tax returns now. As I said earlier, we sent out our form. I may drop that into the chat here as well for those of you who'd like to know where to go to get that. We also have a webinar coming up. I don't think it's next week. I believe it's the week after. Check our event schedule. Where we will be going through these new forms that we have for self-employed income and expenses, as well as rental property income and expenses. These tools will go a long way for making it faster and easier for us to process your tax return. So we will strongly encourage you to use those. Of course, you can still give us a bunch of receipts if you want. It's just going to cost you a lot more for us to prepare the return. So as always, we're here to help. And if you have any other questions that you think of the minute you hang up, feel free to send those over to customer service at CPA4IT. Other than that, I will thank everyone for joining us today and wish you a happy Tuesday. Bye for now.